Right now, more people are trading than at any point in history. Free apps, zero commission, a green button that says buy, and a red one that says sell. It feels like the stock market finally opened its doors to you. It didn't. It opened a casino, and you walked in as the player, not the house. Start with why. Your grandfather bought a stock and held it for 30 years. You don't want 30 years, you want 30 minutes. Inflation eats your savings, rent eats your paycheck, and every screen shows someone your age who got rich by Tuesday. Slow investing feels like losing. So a whole generation swapped owning a piece of a company for betting on a number. That swap has a name. Trading. Here's the machine. Fast. A futures contract is a promise to buy or sell something at a set price on a set date. Lock in oil at $80, and it doesn't matter what oil costs later. You pay $80. An option is the same promise, but you can walk away. You pay a small fee for the right to buy or sell, and if the bet goes wrong, you lose only the fee. Futures can erase your account. Options cost you the ticket. Both let you bet the price goes down, not just up. For the first time, a crash pays. Now the part nobody shows you. When a bank trades, it isn't guessing. It moves billions, and billions move the price. It can buy until a stock rises, sell until it drops, and see the flood of orders before they hit the market. When you trade, you tap a button and hope. Same table, opposite chairs. So why do most people lose? Not because they're stupid, because they're playing a game where the other side can see their cards. Studies of retail traders are brutal. The more actively people trade, the more they lose. In some markets, 90% end up underwater. And the casino barely breaks a sweat. Because the casino has a name. A few, actually. Citadel, Goldman Sachs, J.P. Morgan. These are the houses, and their chips are measured in trillions. One firm alone, Citadel Securities, handles more than a third of every stock trade in America. More volume than the entire NASDAQ. Around 90% of retail orders pass through firms like it. And here's the trick that makes free apps free. When you hit buy, your app doesn't send your order to the market. It sells your order to Citadel first. That's called payment for order flow. The casino paid for the right to be your opponent and to see your move a heartbeat before anyone else. That's why trading looks like gambling. Against that, it is. But look closer, because here's the one door out. The house doesn't win by predicting the future. It wins by owning a tiny edge and repeating it a billion times. And that edge is math you can learn. Real trading isn't a guess about tomorrow. It's a question. What's the probability this trade works, and how much do I lose if it doesn't? Everything the professionals stare at, liquidity, where the crowd's orders pile up, trends, and whether they'll continue, retracements, when price pulls back before moving on, it's all one thing, reading the odds, not the future, the odds. Because the difference between a gambler and a trader was never the prediction. One pulls a lever and prays, the other counts cards. Same casino. And the only players who walk out richer are the ones who stopped betting against the house and started thinking like it. So the next time an app hands you a green button and a red button and calls it freedom, remember what you actually walked into. The doors were always open. The question was never whether you were allowed to play. It's whether you ever understood who owned the building.